Hey everybody, Tom Gentile. Welcome to the program, Tom's Trading Room. You know what we do here? We show you how to spot opportunity, create alternative risk trades, and plan, execute, and manage those trades. Glad to have you here with me again this morning. Monday morning, August 23rd. The markets are open. Let's see what's happening. I want to talk about, wow, I got a lot of stuff I want to cover here in the next hour. Let's just put the big screen up and get going. Market overview. I want to talk about what's cheap, what's expensive. We're going to spot some trading patterns. I've got about 10 of them that I want to look at. I want to look at 10 stocks today, and I don't even know what they all do, okay? That's the thing about being a pattern trader, is that if I'm using artificial intelligence to help me find trades, I might spot some opportunities in some stocks or some ETFs or something that I know nothing about, okay? So we're going to do all this together here on this live stream. Guys, feel free to chat with me. You can do that. Put any comments, questions, etc. in the screen. If you've got a certain stock that you want me to look at, I am happy to look at that as well, based on the amount of time that we have going on today. So again, let me just get through something really quick, all right, before we go any farther. And that is the disclaimer on the screen. Now, you can read it in its entirety. All you got to do is just hit pause. Two quick things. As we all know in the room, stock options and cryptocurrency have large potential rewards, but also large potential risks. And number two, I'm not your investment advisor. I'm not a money manager. I'm here to show you how that I spot these rules-based opportunities. All right, so we will be doing exactly that as we go through the room right now. So welcome, everybody. Glad to see you kind of coming on in here. John, good to see you coming in from Denver, Colorado. I skipped over Colorado. I was actually out on the West Coast. It was a couple months ago almost. And I wanted to come through Denver. I actually wanted to come through Central City and then come through Denver, and I missed it. Anyway, good to see you there. Let's go ahead and let's look at what I believe is the first thing that I like to do is get a good read on what's happening with the overall markets. And so for that, I mean, I could look at these a couple of different ways. This is a 5-minute chart here. This is a 5-minute chart of BTC. And Bitcoin, which started trading again, the Bitcoin futures market started trading last night, popped, all right, because of something that's now happened twice. And that is Sundays, we've seen Bitcoin move higher. And so Bitcoin was trading in the high 40s, in the high 40s Sunday morning. We hit 50,000 last night because when the futures markets opened at 6 p.m. last night Eastern time, there were a lot of buyers. Were those buyers buying because Bitcoin did not drop, right, during the weekend? Were they buying because they wanted to get in? Were they buying because they wanted to get out of shorts that they put on Friday? That's a possibility too. But we saw Bitcoin get above 50,000. The Bitcoin futures markets get above 50,000 once, twice. So last night, 1:30 in the morning, early this morning, 6:15 again, and then again at 7:55 we went well above the 50,000 mark, which means Bitcoin was above the 50,000 mark. Still is, by the way. It's just come back a little bit. So we traded back down. And so far, it looks like since late last night, 50,000's actually been the floor. Now, I hold Bitcoin a little bit longer term, so I don't want to be looking at the 5-minute chart. We're going to look at the day chart in just a moment. The other thing I like to look at is the symbol is /ES. So /ES, this is the S&P 500 futures contract. Now, this is a 5-minute bar here, so stick with me. But this was Friday's trading action. So we traded higher on Friday. And you can see here, we busted above those first hour highs. And we actually closed just above the first hour highs. And then we traded sideways for the remainder of the session. We came in last night, at 6 p.m., down a little bit. That didn't last long. In fact, we started moving higher, and what was just a few points up move last night We're now sitting on, now that we've been open for 5 minutes now, S&P's up 23, 24 points. The futures contracts looks like a great Monday. Is this going to be a Monday where we're going to gap higher and head lower? As of the first 5 minutes, it doesn't look that way, but anything is possible. So, again, if you look at what's going on just this morning, this is the early morning before market open. Here's 9 a.m. And then we just start really just picking up steam right at the 9:30 bell. Looks like a lot of money sitting on the sidelines decided to participate in the market buy this morning. Okay, enough of looking at what's gone on overnight and what's going on in the first 5 minutes. Let's back up a little bit. Let's look at the markets with a little bit more gusto, looking at just more than that long-term approach. So for me to do that, I want to pop over to our software. Okay, so we're going to look at charts with Tom's option tools. We're going to take a look at cryptocurrency with Tom's option tools. And then we're going to look at, I want to look at the money counter. I got something I wanted to spend a little bit of time talking to you about today. And then I want to finish off the hour looking at something I call the morning report, which all of you in here have the ability to get access to. This morning report comes out every single day. We'll talk about how to get that a little bit later in the program. All right. So I see all you guys coming on in. Good morning, Craig, Jim. Hey, Rice. Good to see you there, buddy. Lauren, good morning. And Hershey, also Carol. And glad to see you guys all in here. I'm going to go through, for those of you just getting started and getting in the room, I want to do an overview of the markets. We're going to look at Fibonacci. I haven't done that in a while. We'll look at some fib levels, looking at how the rest of the summer is coming out. I still have this market seasonally going higher through Labor Day, all right, into Labor Day. And a lot of the stuff that I'm seeing is showing highs into mid-September, all right? And I'm going to show you a stock that I'm eyeballing that has a very decent trading opportunity in the mid-September as well. So plenty of stuff to discuss here this morning too. I will get to comments. I will get to stocks, if any of you have stocks, in just a few minutes that you want to take a look at. Hey, you want to do me a favor? You know what that is, right? Down below. Help support the channel. Also, if you're brand new, guys, and I don't see a lot of brand new folks in here. I'm going to bring it up again a little bit later in the broadcast. Subscribing, dinging the bell. You'll get videos, you'll get the live streams, you'll get everything live, and I'll let you know when it's actually happening. I'm going to do a video this week that's going to be a part 2 to last week. So we had some pretty good information about, I showed in last week's video how to, I was actually showing the Robinhood top 5 stocks traded on Robinhood, right? Somebody asked a very good question. What do you do with this information? So I'm going to do a part 2 of how we can look at those top 5 and see if there's something to do on the long side or the short side. That'll be coming up later in the week. All right. I'm going to pop over to stock charts first. So here's my stock charts. You know, I'm missing something this morning, guys. I'm missing something in my group, in my list. Here we go. That's what I'm talking about. Big mouse. Okay. Let's start with the S&P 500. This is SPY. This is the S&P 500 ETF. For those of you that don't know, I'm going to blow these up as best as I can. And so when I've got Legend Doc over here on the left, and there's a reason I have that, is that you can see this was the last time we had any significant bottom in the SPY, although I could go back and I could look at a 75-day chart, and we could probably capture this little piece right here if we want to do that as well. Markets were at 376.68. We're now coming back up and flirting with those all-time highs again. But you never really saw any significant pullbacks. We did get a little bit of a one in May. We did get a little one after 4th of July that lasted and these were all of 5 days. So count them, 1, 2, 3, 4, 5, 1, 2, 3, 4, 4 days. These are 4-day patterns, 4-day pullback, 4-day pullback, 4-day pullback. And look what happened last week. 1, 2, 3, 4-day pullback. And if we follow that, see that there? 4-day pullback. This looks like a very, very interesting buying opportunity. as we head into this week, short term as well as long term. And I talked about some holiday opportunities on this program not that long ago, where, if you're looking for a holiday opportunity, and we can do that. I'm going to jump. Somebody remind me holiday. Just say the word holiday in about 10 or 15 minutes. We're going to take a look at SPY, see if we can find a shorter term trade that we can do with the holiday buying pattern. And I'm talking about the holiday of Labor Day. All right. So that's SPY. Trend is up. We see nothing on the pullback. I said 75 days. Let's just take a reset on this and look at 75 days back. There you go. So that incorporates that 4-day pullback. And you can see here, pullback, the low was 405. High was still 447. Again, shorter term, we still didn't get to the 38% retracement. These are the retracement levels that I'm looking at. And there's no reason to look at these today because we didn't get anywhere near them. We had a big bump up on the spiders on Friday, and then the follow through that happened, Thursday, and the follow through that happened on Friday. So fantastic move there that just really solidifies the fact that we're in the summer doldrums, that we're at the end of the quarterly earnings cycle. Yeah, there's a few more big companies coming out. We'll take a look at one of them today. There's also a look at this, again, holiday season coming forward, which is typically bullish. So we got a lot of bullishness happening, at least for the next couple of weeks. A lot of stuff is on the bull side. All right, that's SPY. Let's move over to TLT. What is the bond market doing? It's interesting because the bond market's moving with the stock market. We did have lower lows back in May, like the stock market. Now, bonds hit a top earlier in July, and we've kind of moved sideways, and we've been sitting in a box now since about July 12th. So a little more than a month, we've been stuck with TLT between 146 and about 152. Okay, so looking at that, I'm looking at really what's going on here and whether or not the bond market is got a little echo there, guys. Apologize. So really just trying to get a view on where bonds go from here. Now, there's been a lot of talk of rates continuing to fall because guess what? The reopening trade might not be opening so much. May not be opening so much right now. So that could be part of the problem, is that we just don't have the reopening trade happening like we expected. All right. So that's a concern. And so we see that going on. And so that's really what I think. Bonds are going to make a move and kind of jump a little bit more as well. So we could see the jump there for bonds. Now let's pop on over and see what cash is doing. So cash UUP. All right. Cash is making new highs. This isn't something to get too concerned about. And I'll tell you why. Because this is the Power Shares Double Dollar Index. It doesn't look at the U.S. dollar versus the stock market. It doesn't look at the U.S. dollar versus the bond market. It looks at the U.S. dollar versus a basket of foreign stocks. So when you look at the Canadian dollar and you look at the Australian dollar, you look at the euro, that's the type of securities that are lumped in trading against the U.S. dollar. New highs, fresh new highs last week on UUP as UUP has moved forward. Again, Fibonacci, I see some Fibonacci numbers. I don't really trade the U.S. dollar, so I look at it as a gauge as to what's happening with other markets. Nothing to look at here. USO, definitely something to look at here. So let's take a look at USO for a moment. You can see that 75 days ago, we had a low in USO that was around 42.5. We got up to the 51s. On this program, we talked about the fact that mid-July, the oil market was likely to pull back. There was a February to July seasonal pattern that we looked at in the markets. Well, that pattern is long gone. We've seen oil pull back. We did get a run back up close to those highs. I have been short oil. I actually covered my oil position. I said that I had a stop below 45. When USO got below 45, and full disclosure, I had the 50-45 put spread. That widened out. That was an October put spread. I didn't expect this to happen so soon, but we hit that target, so I went ahead and pulled my trade off the table. And I believe oil's up about 3% this morning. And we can take a look at that right over here. So let's just do a quick scan at USO. Oh yeah, up even more. So this is what happened. So we closed, this is Friday, 43.42. Look what happened this morning. We're back up to the 45.48 level. Obviously, sometimes you get it right, and the best way to get it right is to plan ahead of time. Plan, execute, manage. All right. I planned my bearish trade on USO. I executed it, and I said, if this thing goes into below the $45 level, which it did Thursday, it did Friday, and then there you see Monday, we're getting that pop up. There's a lot of folks that covered this trade, and some of them are covering it right now, the short trade. Some of them are going long. And so it just got overdone. The short side of oil got overdone. I still think we got a chance to double bottom and hit oil, but at this point, I have no reason to get back involved into USO. All right, back to the next chart I want to look at, and that's GLD. Okay, here's one we could spend a few minutes on. GLD, I love it as an investment. I don't like it so much as a trade, and this is why. Take a look at what happened with GLD. You know, you go back to June, we hit 178.77. I'm looking at the short-term chart right now, the short-term chart of GLD, and I'm looking at it over the last 75 days. So when you see this chart, and I see it in the last 75 days, you see where we went from 178.77 down to below about 161. We closed at 161.72. Now, we started to make a run up, and now we're starting to roll over a bit. That might be because we're nearing the Fibonacci numbers. All right, these are numbers where I'm looking for ceilings. You get that? A ceiling on GLD. So the ceiling on GLD, I mean, we blasted through the 38. We blasted through, and you're looking at these numbers here. These mean nothing, okay? Take a look at this line that I have that's been drawn from 178.77 down to 161.72. Now these lines, everything past this drop down makes more sense. So 168.23, we get up there, that is hard resistance. 170.25, 50% hard resistance. 172.26, 68% hard resistance. These are going to be areas where GLD is going to run into some trouble coming through. So that's what we see happening with GLD. Again, I like the move that happened over the last couple of weeks, but we're running into some headway here. Next, I want to finish out looking at the stocks with VXX. So VXX, I look at this as a potential hedge trade, but I'm not going to look at it again until after Labor Day. Then I'm going to be looking at potentially trying to buy some of this, all right? In terms of options, I'll look at buying call options on VXX as a hedge against whatever I might have long in my portfolio, right? I've actually been, just to let you know, with full disclosure, with my long-term portfolio, I've been trimming positions. I trimmed positions 2 weeks ago. I trimmed positions last week. I'm going to trim some positions later this week and over the next few weeks as we head into mid-September. Maybe I'm wrong about this, but I think the market needs a little pullback, and I want to trim my long-term holdings, and I'm going to get primarily into options trading as I do trim those holdings. But I'm also going to be using this, and I'm going to be buying some of this as a hedge against any long-term holdings that I might have. We'll get into that in future live casts. But the chart I'm looking at is VXX, and it has gone from around 48, right, back in May. Now, you might be thinking, when was the VIX trading at 48? It wasn't. It never has. Well, it has. It has. You have to go back to COVID days to see it at 48. But VXX actually just went through a reverse split. So everything that was low on VXX got pumped back up again. So you got to look at this as after reverse split prices. 48.50 on the high, all the way down to 26. We had a little bit of a move, but it didn't last long at all. This was last week when the market dropped. The VIX actually rose a little bit. Didn't last long. This is telling me that the markets still want to move higher. So when you confirm everything, when you look at the trend in the S&P, up. When you look at seasonality, up. When you look at bonds going up, that typically doesn't happen with stocks, but they're looking at now perhaps going from talking about raising rates to talking about raising rates again, and that's what's causing rates to drop into record lows again, and we're seeing bond prices going higher. Now you top that off with a VIX that is down near its lows, and this just tells me that's the side of the market that I want to be on, the long side. All right, so let's take this opportunity right now to take a look and see if you have any favorite stocks you want to look at on here. I'm going to scroll up and down on the screen, and I think I saw Hood in here being one of the ones we were looking at. Yeah, Bruce was saying, hey, what's going on with Hood? Let's take a look at Hood and see what's happening, Bruce. So again, the stocks I'm looking at, folks, are stocks that have options that trade on them, okay? Because that's what we look at. If it doesn't have an option on it, I have nothing. I don't have anything I want to do with it. So Robinhood, even though I'm looking for a 75-day chart, I'm not getting it. Not getting a 75-day chart. So what's going on with it? Well, remember the IPO? The IPO was down in the 30s. If you got to go back farther than this chart. So the IPO was in the high 30s. We went down in the low 30s. I know this because I participated in this IPO, right? So I didn't go hard and heavy on it. Just wanted to take advantage of doing a direct listing IPO. So I did. Then we started to move higher. Then we started popping down lower, and I started selling put options, out of the money put options ahead of that earnings report. So I did that, took a little bit of money, and then got out of the trade and got out of my trade. Now I'm sitting and I'm looking at, do I want to take advantage of any more option activity on this? There's one thing that I'm going to look at, and I'm going to share it with you right now. I don't have a lot of this, but if we do an overlay and we look at, say, the 7 to 30-day options on Robinhood, they're down. They're going down. They were going down. They cruised up a little bit before earnings, but they're back down again, which is telling me that the sell side is still the side you want to be on. Not on just on shorting the stock, but on I don't want to be buying calls or buying puts because these options are still expensive. Now, they're not anywhere near expensive as where they were a couple weeks ago, because you take a look at this number 250. That's the range that was looking for this stock to move. Now that's down to about a 90. So if you equate that into terms of options, what was selling or what did have time premium for, let's call it 2.5 points of time premium 2 weeks ago, now it has less than $1 in time premium today. That time premium has shrunk, right? I'd like to see that shrink a little bit more. Maybe I could take advantage of that, but it just doesn't look like something that I want to jump into right now because I've got no patterns on it. But I definitely don't see any buying opportunity unless the only thing you're looking at, Bruce, is pure price and the long term. If you're looking at pure price and the long term, then maybe it might make some sense. All right, let's take a look at here. Morning, Tom. I've heard a lot of traders who are constantly short the VIX because it's built-in decay factor. Claudio, absolutely right. A lot of folks are. The problem with being so short the VIX right now is that it is getting into some ultra short territory. It's kind of like I remember that if you ever heard of the forex markets and what they called the carry trade, where basically you went you shorted a currency that had a higher interest rate and you bought a currency at a lower interest rate, and it was, a lot of people thought it was free money until it reversed itself, and then it took a lot of people out of the business of trading. I could see that happening too. I don't want to be I don't want to be totally on the short side of the VIX, because the VIX is kind of going to be one of those markets where we drop down. It's just a slow burn, and there's going to be one little piece of information that makes it pop. And that's going to take a trade that's going to be a low reward, high risk trade. It has a high probability. Yes, it does. But there's going to be a day that's going to come, and I think it's going to come very quickly here in the next 30 days, that's going to make a lot of traders overreact to the long side. I think there's just better ways to make money in the markets than that. All right, Kathleen's asking about DRNA. Let's take a look at DRNA. Is it an optional trade, DRNA? Because I'm not, in my mind, coming up with stock, the name. Okay, that's why. I've never traded this one before, but let's take a look at it. All right. Is it Dicerna Pharmaceuticals? Am I saying that right? I don't know. Take a look here. We had a long-term trend up. Now, this is not, I mean, right here, we can look at Fibonacci. All right. If this was going to find a buying opportunity right now, going from 39.99 down to 19.68, stock has dropped in half. Earnings was a miss. All right, was also a miss a quarter ago. But you can see what happened here. You had 3, 6, 7 days of down before it moved higher. All right, so if you count them here, we had a little more than 7 days of down. Looks like 3, 6, 9, 11 days down before we got to move higher. But if you can see what happened here, the day after earnings, this stock made a move, a range move. And that range move told me that if it was going to go up, I would be a buyer. They would flush out the sellers at 28. That didn't happen. In fact, if anything, sellers came in, and this became what's called a runaway gap, right? Gap down, and it ran away from the gap. Here's the gap. Here's the stock running away, right? A runaway gap means that there's still further moves to go to the downside in this case. Runaway gaps also happen to the upside. I'm actually expecting a runaway gap to happen to a stock that we're going to talk about here a little bit later in the program. But runaway gap to the downside, and you can see here we caught some support. If this is truly the bottom, and I don't know if it is or not, then what I'm looking at, let's zoom in here for a closer look, is that you'll find resistance right up here. This is a 38% retracement of the high to the low. But it's also interesting that it's up here near the area where we gap down. So that's going to be some resistance too. Heavy resistance up here around the $27.44 area. So thank you very much for that. Let's take a look at, I'm going to do a couple more real quick till we hit the top of the hour. Then I'm going to move forward. So let's see. Hershey's wants to look at BODY. Again, another stock that I'm unfamiliar with. Body Central. Okay, and I'll tell you why, because this stock has only had options on it now for what looks to be a little bit more than a month. All right, optional stock over here started trading options on the 8th of July. And I mean, it's a $7.92 stock. If you really love this stock, maybe the options aren't the thing to buy. Maybe it's just the stock itself. Again, when I start out a Fibonacci move that starts higher and moves lower, and you can see what happened here. 1087 down to around 715. We popped, and look, same day we hit the 38 and the 50% and came back down. This looks like it wants to continue to move lower on the technicals. All right, so Hershey, that's what we see there. All right, Tony wants to talk about love. Tony says, show me some love. Let's take a look at love. Southwest Airlines. I know that stock very well. LUV. Let's take a look at Southwest. This one's going to have options. This one's going to have a lot of room. But look what's happened with the reopening trades. Remember, guys, if there's anything I've learned in the 25 plus years that I've been involved in trading, actually more than that. We're looking at 35 plus years now that I've learned in trading. It is buying the rumor, selling the news. Really is. I mean, it's playing out right here. It's playing out. Take a look at last year. Nobody was flying on, was taking flights. Middle seats were empty. You were actually getting customer service on a flight. You didn't hear about any kind of problems with fist fights breaking out, flight attendants duct taping passengers to their seats. You didn't hear any of that because it just wasn't happening. It was like airline flights during COVID when they reopened in the beginning. It was like flying back in the 70s, back in the 80s, right? When the industry wasn't deregulated. And what was going on with stocks? They were going higher. Now, you go back to springtime of this year when they started reopening and the middle seats, we gotta fill them up. That was the first thing. Middle seats full. Oversell those flights, because again, airlines what are they doing? It looks like the industry is oversold right now, and you can't find a flight. And most people are thinking, wow, this is gonna be great for the airline industry. But they're missing two things. Number one, we don't have as many planes in the sky as we did pre-COVID. There's still a lot of planes still sitting on the tarmac, sitting in the desert, all right, because of two reasons. They haven't gotten to that capacity yet, and they don't have enough crew to help support the flights. And number two, traders aren't following the buy the rumor, sell the news concept. All right, sell the news concept was that now we're going back into full operation, and look what's happened. And it's happened with Southwest, and Southwest dropped. Look, there was a 3-day move where we jumped up before earnings, but it's fallen again. This is a very, very crucial level down here. If we close below the $47.36 area, then this too may not be the bottom. All right, so I wanted to mention that one as well. Let me get one more in here, and I'm going to jump in. Let's take a look at, Claudia, we were looking at X. We were looking at U.S. Steel. Let's go ahead and look at U.S. Steel. And so we'll finish up with U.S. Steel, and then I'm going to move into cryptocurrencies, where I want to go next, guys. So U.S. Steel. Okay, so what's been going on with commodities? Remember, we've kind of had this rotation, where first it was, you go back and you look at prices. Housing prices, up, okay? They're getting a little jittery right now at the top, right? Then we're looking at, okay, where else are things going higher? Commodity prices, right? It started in copper, it started in lumber, and it rotated over into steel. And this is in U.S. Steel, you can see where steel prices just in the last couple months moved extremely higher, and it was noted in the price of U.S. Steel. U.S. Steel had good earnings, but take a look. We've had a couple of moves down. U.S. Steel, first stop, 26.41. Second stop, 25.48. Third stop, 24.54. These are Fibonacci resistance pieces, because when you go from low to high and you start to pull back, these are some interesting areas that are on the pullback that I see. All right. I don't think commodity prices are going to be going back down to the lows they were at anytime soon, because when you take the dollars, the US dollars that we have flushed out into the system, that is going to cause things to go higher. I mean, look at the price of food, look at the price of gas, look at the price of everything that you and I are using. And that is actually equating into higher prices. And I do think that there may be some areas where we're going to pull back to. But these could be very good sticking points for things like U.S. Steel. All right, so that is stock charts for you. For those of you that are joining me, I want to welcome you to the program. Show me some love. Give me some thumbs up there and like this particular live cast if you find it useful. I will let you know this. If you're brand new, welcome to the program. We do things a little differently over here than some of the other channels that are out here in the YouTube community. I don't sit and look at this stuff all day and go, hey, it's going up. Hey, it's going down. Hey, look at Bitcoin. It's going up. Look at Doge. It's going down. I don't do that. All right. I'm not an emotional trader. I love to see when things go in my direction, but I also know things are going to go on the other side of me. So what I do is I just follow these 3 rules as a pattern trader. I like the spot rules-based opportunities. Now, in order for you to have rules-based opportunities, you got to create some rules. And some rules might be, for me as a pattern trader. So if you're a trend trader, that's a rule, okay? That might be a hard rule to back test, but it's a rule nonetheless. If you're a fundamental trader and you only buy stocks that are first-class quality stocks that continue to increase revenue, to continue to increase earnings, maybe they increase their dividends, that's following rules. If you're simply going out there buying on emotion, to me, this is my I've had hard luck doing that. I've had hard luck buying on emotion, It just simply does not work for me, right? So this is what we do as rules-based traders. Let's get back to it and let's look at it. You can apply rules to cryptocurrency. So if I pop on over to cryptocurrency charts and I'm going to look at just the big ones, you can see here Bitcoin. Now, I've taken this back. We've been talking about this for a while now. We went back and looked at Bitcoin. If you take a look at what happened from November 6th, when President Biden was elected, and trust me, he's going to take full credit for the price of Bitcoin if it goes higher. But I look at time frames, November 6th, all the way out to May 14th. That was Bitcoin near its lows. And you can even go back lower. I think pre-COVID, we were in the $3,800 range, right? But November 6th, I think we were trading below 10, went up to 63,000, 64,000. We flirted with that, came back 60,000 again. And you know what? I actually got to take this back 150 days. I got to make the chart smaller, guys. I apologize. That's what we're looking for. That 65,000 high, that 558 low. And we pull back and look at this. 1, 2, 3, 4 areas we pulled back to just below 30,000. Now, this was mounting for, I heard a lot of folks saying, we're going back down to 20. And it was very well possible that can happen. So when we were hitting 30, 1, 2, 3, 4 times, and right in here, this was back in July, right in that area of July, we were in an area where there were a lot of folks who were starting to just thought Bitcoin was over. The fad is done. It's like Beanie Babies. This thing's done. Take it off the burner. It's cooked. And it wasn't. And that one day back on the 21st of July, you had that fantastic reversal, right? That made weekly highs in one day. Since then, what has happened with Bitcoin? We've been talking about these levels. Let me bring them up to you again. 42,693. That was the 38% retracement, where if we were going to have any trouble, it was going to stop there. And it did stop there for about a week, and then it crushed through it. And then the next one was 46,677. Well, that happened in about, look what the crush through happened. 1, 2, 3 days later, we hit it. We hit it again. We hit it again. We came back. We crushed through it. 46,677. Now we pull back. Folks, I've been talking about this third level. 50,661. All right. Guess what? The news, social media, these folks are taking this thing past the 50,000 mark. But we did run into a little bit of headway here. We've crushed that. And there's your next number. All right. What is it, Bill Engel? There's your sign. Here's your sign. There's your sign. That's it. 63,558 is the closing high for the year of Bitcoin. We get above 50,661.07. That's the next stop on the bull train for Bitcoin. That's what we're looking at. But I got to tell you, this is not the strong one, guys. This is not the strong one for Bitcoin. Let's take a look at the strong one. The strong one is Ethereum. All right. So let's take a look at ETC. There's ETC. Let's update that. Same chart. Now, you can see what happened with Ethereum. With Ethereum, you had this big move up, followed by the move down. I'm going to shave some days off. So we're going to go to 125-day chart on this one to catch that high to low. So we go to the 125-day. No, it's not. I can't even do that. 115, maybe the 115-day chart. There we go. So what I was doing is I was forcing the chart to start from the high and go to the low. The high, which was 133.59. Oh, I'm looking at the wrong one. Ethereum Classic. My bad. ETH. Happens with those old guys every once in a while. There we go. So here's the real chart I wanted to look at. 4,200, we actually got as high as, was that 44? Almost 4,400 back on that nice crispy day in May. And take a look at this. This was about May 10th, 4,400. By May 20th, This was about 10 days later, 10, 15 days later. It took 2 weeks. This thing dropped all the way down to 1,800. When you're holding something that's 4,400 and it drops down to 1,800, it can hurt, all right? I held this. Now, the one thing is that I actually bought it a whole lot lower. I bought a lot of this a lot lower, and I still own it a lot lower than 1,800. So it's a lot easier to hang on to something when it went from 4,400 down to the 1,800 number. Again, once, twice, 3, 4 times, and it held very well. And then look at this move now. We popped this move. Now, take a look at what's been going on since then, all right? I'm going to blow this up for you. And let's look at dates here. So remember, this is July, okay? So end of July, beginning of August, end of August, as we go through the resistance marks. 1786.52. That was the low. That was that's B day, bottom day for Ethereum. And remember, if you can remember back to that time, it was a time when if you were looking at financial television, they were all saying it's done, it's over, it's heading lower. I mean, go back and you can pull articles, and you can pull articles, and you can look at names of people that said this thing is over. They're wishing that these articles could be deleted now, because you see what's happened with Ethereum. Ethereum ran 5, 10, 15 days higher of successful highs before it had 1 day down. Then it had another couple days up, but this is really what I want to show you. 2,700. It hit that resistance area, pulled back for 3 days, went through it. Bang, bang, bang. 3 days later, through it again. Then about a week later, we went through the 61% retracement of 3264.47. We hit that, we pulled back, and guess what, folks? We're back above it again. So we've closed above this about 4 days. Now what's got to happen is we need to close above all of this traffic that's happened here about 2 weeks ago. All right, we get above that. I like that number right there. 3,400 is the number I'm looking at for Ethereum. Ethereum needs to get to that area and become strong again. Right? Let's take a look at one more. How about it? How about the fan favorite, Doge? Now, let me make some comments here about Doge. I don't trade Doge. I don't trade meme coins. If it's got a dog on it, if it's got an animal on it, I want nothing to do with it. Okay. My son traded Doge. He was one of the lucky few that got out of it right at or around that Saturday Night Live area. I think he sold some for 70 cents. So I've never seen anybody in my family top tick something. And he did. And he top ticked because of a simple rule that I'm going to share with everybody. In fact, I already shared it with you. I'll share it with you again. Buy the rumor, sell the news. Now, what was the rumor? The rumor was that Elon Musk was going to come on Saturday Night Live and push Doge. And a lot of people heading into that week started buying this thing very, very quickly. And there's Saturday Night Live. And then boom, 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 and we're back down. And we were sitting in the living room watching Saturday Night Live, and he's boop, boop. What'd you do? I sold some Doge at 70. And maybe part of it was luck. Part of it was buy this rumor, sell the news. He sold the news. He actually sold right when Elon was coming on. Good for him. All right. He's made some blunders too. He bought Krispy Kreme donuts on the IPO. And you know, if you want to look at that one, let's take a look at that. If it has options yet. D-Nut, I think is the symbol. I don't own this one either. Yeah, he bought the IPO. And so, you know, he owns it right around this area in the 17 area, and it dropped down to around 13. But it looks like it's gotten some legs and moving a little higher here. So, but he owns that stock. He's a fan favorite on Krispy Kreme, and let me just say he wants to join the research and development team at Krispy Kreme and research these donuts. But he's underwater on D-Nut right now. So I mean I give him props, but I want to let you know that, nobody is, infallible. Nobody is above the markets. There's the bull side, the bear side, and there's the right side. Back to cryptocurrency, as you can see, what's going on with Doge is this. So Doge just dropped down. Is this a tradable coin? Yes, it's a tradable coin, but it's a coin that I don't want to own for a large bit of time. And, take a look, 68.94 all the way down to around 17 cents. Now it's come up. Here's another reason why, out of all the coins that are out there, why would you want to own this? You got Ethereum, which is already popping. It's 61% retracement level. You got Bitcoin, who's on it right now. And you got Doge that hasn't even hit the 38% retracement level. So it's still the weaker of the coins if you hold it or not. All right. So that's cryptocurrency. Now let's get into some actual trading patterns with you here as I kind of round out our time together. I want to share with you some trading patterns that we see. Claudio, you got a question here real quick, and let's go ahead and answer that. So what are these dotted lines that you're seeing on these Fibonacci charts? So these dotted lines are some, we call them prop lines. It's some stuff that's proprietary to our tools. And by the way, for those of you that are interested, you've never used our tools before, there's a free trial to our tools. Just go down below, and there's a link in the description. You can click for a free trial to our tools, which include these dotted lines. These dotted lines are what we call stock chart peaks. And what we're doing is we look at peak support and peak resistance. So for instance, when we get a peak support area, then we'll throw a dotted line across. So we get peak resistance areas. We throw dotted lines out there. Here's a support line. Here's some support lines that become resistance. And so that just gives us another layer of where traders may be sitting with stops, either on the buy side or the sell side. All right, so we see that with Doge. So I'm going to move into seasonality. So one of the things I look at with seasonality is I look at a calendar, and I look at something called the money calendar. And the money calendar gives us the ability to look at what's happening. It's one of the few tools that I think it's out there that allows us to, as a forward look into time. And what we're looking at with a forward look into time is we're looking at stocks that have had a history of the next X number of days going higher or lower. So we look at there are thousands of stocks out there. We throw most of them away. I'm really only looking at stocks that have the top 1%, 2% of stocks that have a 90% or better chance of going higher or lower. And again, it's not, I even have some that have 100% that for 10 of the last 10 years, they moved higher or lower. Okay. And so CRM was one that came up on the list over the weekend that I'm looking at. Now, CRM has earnings on Wednesday. You can look at it as an earnings play, but I want to look at it as a play that takes us through earnings. So to take us through earnings, we've got to really take a good look at how we can hedge our risk. Because let's take a look at the chart. So let's take a look at the details first. The details are this. There's a pattern out there between August 23rd and September 17th, and the pattern looks like this. In the last 10 years, it's actually pulled in 75 points. It's a 20-day trade, $7.53 on average. The last 3 years, it's actually been very well. It's been above 10. It was 5 in 2019. 2020 was the trade where Salesforce really excelled well, and a lot of it was COVID. Okay, so add that in. That's why the 40 points. But I still think that you got that 10-point potential move there that could happen this year. And so you take a look at Salesforce as a potential move to the high side. Look at this drawdown. This max risk to drawdown is about a 20-to-1, which is insane. This is what it did last year. So let's take a look at it, 40 points higher. But after earnings, it popped and it went from the 220 area up to above 280 before pulling back. So these are things that as pattern traders, we want to take a look at. We want to double check them. We want to see, what made that move happen? What made that big move happen from there? And then, is there something I can capitalize on? So that's the plan. From here, I want to look at a chart. I want to look at a stock chart of CRM. So let's go back and take a look at the stock chart of CRM. So I'm going to put in CRM in the chart. And this is going to take us back to the last 75 days. All right. As you can see here, during this last 75 trading days, we did have an earnings report on CRM, and it did pop. It did a pop and drop. So it popped up, and then it pulled back to where it was before earnings, before moving higher. So you have to think about this for a second. This is a 20-day trade. Do you want to trade it and then Thursday sell it if it pops up? Maybe that might be the right way to do it. All right, so if it goes and jumps up right away, what are your options worth the day after? And if they're worth something, maybe a double, take them. All right, because in this case, it pulled back. That was 4 days, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. Okay, so 20 days, it actually moved up into the 245 range. That made sense in this case to hang on a little bit more. So here's what's going on with Salesforce right now. Just like last quarter, it's making new highs into earnings. And just like last quarter, we're looking for a potential pop on it. So what we want to do is put a trade on that has the least amount of risk. Now let's go ahead and I'm going to update the time because it is we have added in what's going on with this stock, and it's popped up. It's trading right around 260. So if we're looking for a potential 10-point move into earnings, then what do? Step one, we're spotting the opportunity. Step two is create that trade, create that low-risk trade. Again, I'm not your investment advisor. This is not a recommendation. But what we could do is go in and start to get an idea of what these options look like as we head into this week. First, these are the options that I'm following. There are August 27 options. Those expire in 4 days. This is a 20-day trade. All right, and then you add the weekends and holidays on. So we're really looking at not the SEP 3s, not the SEP 10s, but the SEP 17 option. Because remember, what was the money counter looking at? August 23rd to September 17th. All right, so I want those SEP 17 options. So I'm going to update those. We're going to look 10%. Now, 10% above this stock price is going to put this thing well above it. I think we could probably look at the 5% above, and that'll give us something that takes us up into the, into the 270s. Yeah, there you go. So there are the call options that are in the 217 area. Okay. I'm going to see SEP 17. So 260 calls are $10.45. If you're going to take advantage of a trade that has moved an average of 10 points, you don't want to buy a $10 call option. I mean, you're lucky if you break even. But we could buy this call, and then we could sell up here at the 270 area. Let's just take a look and see what that's going to bring us in, what's going to trade for right now. So risk graph. You can see here, we're talking about a trade that you could put on now, not for $10.45, but for $4.20 for the spread, because you're buying those 260 calls, but you're selling the 270s, and that brings money in for you. So the net is still a debit, but the debit is going to be less than half of what you would have paid just for the 260 calls. Now, we have a maximum profit potential of 580. So that's more than a double. But in order to capture that more than a double, CRM's got to be above 270 it's got to be at or above 270 on September 17th. This is what the trade looks like going into today. So here's the chart today. All right. I'm going to try to put this all into focus for you. Here's the stock chart. This is the actual option trade where you can see the limited risk of 400 and, what was it? 400 and, got to look at it again, 420. And the reward of 580. But that risk, that 580 doesn't come to you right away, nor does the 420 loss again going to happen against you right away. But let's say that we see Salesforce jump to 270 right after earnings. That's going to put the trade right after earnings somewhere around, you're going to see a profit, but it's not going to be $500 right after earnings. It's going to be about $175. Now, you'll also see that volatility drop, so that might push the profits in your favor if we're at 270. But it's going to take a few weeks to take us way out here to the edge of the profit zone that we're looking for. So spreads, lower your cost, lower your risk, especially when you're going into earnings season, right? But it's also going to hamper your reward ability if we get a big pop in this stock as well. So it's a trade-off, right? But I'm willing to trade that risk in there, right? So that's CRM. Take a look at that one. Take a look at different types of ideas with CRM because you'll see that this one here, look at that volatility. This is the chart. This is the chart you're not going to see on everybody's software. You might see volatility. We look at that volatility and we gauge it, but look at the 7-day vol. These are procrastinators going in buying call options ahead of CRM's earnings. If they would simply buy the 30 to 60-day vol, they're going to see quite a bit of a deduction in volatility. And then look at the long term. So the short-term vol is up there around, it's trading up there around 68% range. Your long-term vol takes you down substantially. You're getting better quality buying the longer-term vol option if you're simply going to buy those calls on their own. But if you're going to try to take advantage of that 30-day stuff, that's why we're looking at the spread, folks. The spread makes all the difference in the world there. All right. Let's take a look here at one more thing before we jump out. So where are the cheap options as we head into this fourth Friday? I think it's the fourth Friday of August. So I'm going to do something. I'm going to look at something called the morning report. Oh, holiday. Someone was supposed to remind me. I think somebody did. Someone said holiday quite a while back. If I could find it in here. Who said holiday to me? You know that I can't go back and look at all these comments, but I did see holiday in all caps somewhere. I wanted to give props to whoever said it to me, and now I don't see it in the comments section anymore. But let's go ahead and look at, first I'll look at morning reports. All right, so morning report. If you want to get access to this, there are two ways to do that. Number one, obviously, if you have our tools, tomsoptiontools.com, what you're going to do is you're going to come up here and you're looking for the morning report. The morning report is found by going to the options tab and then coming down to the rankers. And you'll see an expensive, cheap ranking. You'll see how we rank options down at the bottom. You'll see morning report. Click on morning report. It's going to give you 6 different lists. Expensive IV. These are stocks with expensive options. Cheap IV. These are stocks with cheap options. Over the last year, stocks that have options that they're the most expensive they've been all year. They're the cheapest they've been all year. Come down a little bit more. You'll see unusually high calls, unusually high puts. Come down a little more. You'll see high open interest and high volume. So where are the cheap options? Right here, ladies and gentlemen. Plug Power is sitting in there at number 1. And if you click on these, it actually will give you the stock. And you see that black line there? That's the options. Much, much higher. These options were much, much higher back in May. They were higher in June. They were higher in July and August. But they've gotten lower. They've been going lower since May. Look where they are now. The options, which were trading at an IV over of 100, are now trading close to 60. That means these options are 40% off right now. Time value, 40% off. Come get it while it lasts. Now, when you look at this chart shouldn't tell you, these options do not tell you it's time to buy calls only. I mean, you've got to do some homework and decide whether these make sense, all right? Do they make sense as a call buyer? Do they make sense as a put buyer? I don't know, all right? That's where you go in and you look at rules-based trading. What's the trend? Is there any seasonality? What's the fundamentals? What is telling you, what's giving you the reason to buy the stock or sell the stock? And then if it's a screaming buy or a screaming sell, then you're saying to yourself, well, I know what to do with the options because they're cheap. I'm going to buy them. All right, so that's Plug Power. And again, I said there were 2 ways you could get this list. Number 1, that's one way to do it. Number 2, right on the phone. All right, right on the phone, take a look at if you have an iPhone or if you have an Android device, you can download this right here. Let me put it in the screen for everybody to see. All right, take a look at that. That's my iPhone. I actually have those 6 lists available. It's on an app called TG Suite. I'm going to change that name too. I don't like that name. TG Suite is the app. So go and download it. It's free. All right. And what's also free is that when you get to the app and you download the app, it's going to ask you to log in. Now, if you're a Tom's Option Tools subscriber, you can log in that way. But if you're not, down at the bottom of the app, you're going to see non-subscriber login. All right, put in your email address and I think it's name and email address, and then it'll give you access, and you'll see this pop up. Now, the first 6 at the top, those are members only. But that one down there at the bottom, that's the morning report, and you can click on that. And I'm clicking on it now, and you'll get those lists. And oh, there's that cheap IV, and there's the cheap IV. And look, there's plug at the top. See that there, guys? Plug. It might be backwards. I don't know. It's not going to be backwards on your screen. I promise you that. Okay? So there you go. Let's finish up with holiday trade. I did say, Scott, hey, Tom, holiday. Let's talk about the holiday. All right, let's do the holiday real quick. So I don't have this all prepped up, so we're going to do it all together. This is really, truly live trading. Not that I prep everything. I like to have everything up here at the top so I know what I'm not going to forget. I didn't have holiday up there, but we're going to do it now. So I'm going to jump right off of this area here. To get there, for those of you that are tools users, I want you to go to Tom's Tools. I'm going to go right to the front here. Look at all this information, all this stuff that we can do. I mean, option traders, go here. Contrarian traders, these are folks that actually do the it's similar to Elliott Wave, but the problem with Elliott Wave is that what I see with Elliott Wave is it's subjective. That means the wave counts can move. Our stuff doesn't move, win, lose, or draw. Complete trader, that's where I'm going. Money counter, which also includes money holidays, our money counter app, and the money clock. I'm going to click on the money holidays. Now, I don't know what's going to come up here. Might not get anything, but I mean, I'm only going to look at SPY. SPY. All right. Now, let's go ahead and choose a holiday. We're going to choose Labor Day. Let's go ahead and can I make this even bigger? There we go. Let's choose a holiday. How far are we from Labor Day? A week? Let's see how many days we are. So I'm going to go look at my calendar on my phone. I don't want to move anything here. There it is. So we really got 1, 2, there's really about 10 days, 10 trading days before Labor Day. So we're going to use 10 days before. And you know what? I'm going to show you a couple things. So let's click on before. And then down here, well, let's see. That's it. Let's click submit. It's that easy. Did we get anything? Wow, I got a bearish and I got a bullish. Okay, so this tells me when I see a bearish, now 10 days before, but then 0 days after. Now it also says the last 10 years, if you bought the day before, then you would lose a little bit. So maybe 9 days before makes the most sense. If I went in and looked at 9 days before, might even have a better situation. Let's go 9 days before. Let's hit that thing again, see if that climbs a little. It doesn't. All right. Just 9 days. So it really is, you got to go in and look at this 10 days before, because that's and then I'm going to click here just to see what we're talking about here. There you go. 8 and 2, 80% of the last 2 years, we've seen the holiday trade move higher, but the last 2 years, it really hasn't moved at all. So is it moving after? I don't know. Let's do something called the bracket. The bracket looks at before and after, 10 days before, 10 days after. Now, so we'll hit that thing and see if that makes any sense. Oh, look at all that blue that just came up on the screen. So this is what we're looking for, folks. All right. Now, 10 days before, 10 days after, I've got 70s and 80% accuracy on the screen. So what I can do is I can look at, well, which one had the biggest percent move during that time frame? It was the 10 days before and 8 days after. Gave us a 2.38% move in the in the SPY. So that's what I'm seeing there, SPY. All right. So there's your trade, and then it's a matter of, guess what? The S&P has SPY has cheap options right now. We know that because of the VIX, VXX. So buying some good quality SPY options, maybe a little bit in the money, is what I like to look at, and that might be a good trading opportunity. So there is the holiday trade. Let's take a look at one more thing here. I'm running a little over time. That's okay though. QQQ. What's it look like with the Qs? So takes a few seconds, but there you go. 3.24% with the Qs. 90% effective. Let's click on that. Let's see what we're talking about here. So when I click on that, I actually bring it up. But last year it didn't work. All right, what was going on with the Qs last year that made this fall apart? I don't know, but looks like 9 of the last 10 years it actually worked pretty well. But there you go. So this is the holiday trade that we can look at moving forward. All right, guys. Hey, do me a favor here. If you're just joining me, if you like what you see, help me out. Throw some thumbs up down there. It actually helps support the channel. Also, guys, I want to thank you for all the comments you have posted. There was one comment that I saw, and I didn't. It was a good comment. I wanted to make sure everyone knew about, and that was it had to do with when we do these live trade segments. So what I do is I do these Mondays, and what my plan is, I used to do them at noon. Now I'm doing them right at the opening bell. So I like to do them for the first hour of the day and kind of get an idea where the markets are shaping up. We'll do some scans. We'll look at a couple of things. But really my job here is to try to educate you on how I spot opportunity, to educate you on how I look for these acceptable risk trades, and of course, how I plan, execute, and manage those trades. That's what we do here, all right? So if you're new, I'm telling you this because if you're new and you have not yet, and you want to get, if you're one of the 50% of folks that come in that haven't subscribed to the channel, subscribing gets you that information. It lets you know when my next live stream's coming up. It lets you know when my videos are coming up, and you'll get them before everybody else. So thank you all very much. Appreciate it. Have a great rest of your day, and I'll see you again. Actually, I'm going to have a video coming out here later this week. We're going to take those top Robinhood trades, those stocks that all the Robinhood traders are trading. I showed you how to find those. This week, I'm going to show you how to trade them. So it'll be a part two of how Robinhood traders are, what they're looking at, and how we can trade them, and if we can trade them. All right, so I'll see you then. Have a great day, guys. Bye. See you later.